I think the second half of this year gets explosive. I think assets get explosive going into midterms. I still think we can end the year with a $250,000 Bitcoin. I think we're starting to feel out a bottom. Now, whether we actually go through, listen, when you put assets through what they're being put through right now, you might trip up a bank. You might trip up a hedge fund. You might trip up a major, well-known financial services firm. You might. I would not be surprised if Bitcoin is at all-time highs May, June. That means over $110,000. And that's 6 weeks away, 10 weeks away.
Jack Mallers opens his discussion by reiterating a key theme he has emphasized for months. The current Bitcoin market is designed to test investors' patience. It is not about a straightforward rise or fall. Rather, the market is chopping aggressively, moving up and down in a way that forces traders to make emotional decisions. This volatility is not just about Bitcoin. It is a reflection of broader macroeconomic conditions. According to Mallers, the U.S. government, specifically the Treasury, is tightening liquidity, seemingly aiming to cause a recession deliberately. This strategy aligns with the administration's goals of reshoring production, weakening the dollar, and focusing on domestic economic growth. He highlights that this kind of economic policy leads to inflation, which in turn is highly beneficial for Bitcoin.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I've been saying for many, many months now, this is a wear you out and scare you out phase within Bitcoin. This market's going to chop you and eat you alive. I don't expect Bitcoin to run away anytime soon. It's a lot of near-term volatility, long-term bullishness. I think we got some insights into how the United States, how the Treasury is thinking about macroeconomics, thinking about liquidity, thinking about the markets and why they've been behaving the way they've been behaving. So if that sounds good, they seemed to be tightening liquidity, almost trying to cause a recession on purpose. I said with this new administration, I thought there'd be a lot of near-term volatility, not meaning up or down, just meaning bouncing around, but a lot of long-term, so I'm talking 3 months from now, 6 months from now, 9 months from now, 12 months from now, bullishness, a lot of to the upside. Why do I think that? Why do I say that? Because Donald Trump campaigned on a weaker dollar. Donald Trump campaigned on reshoring production in the United States of America. I think what you're seeing globally is a lot of my country first, okay? That's very inflationary. Let me explain. In order for a country to focus on itself, that means it wants to shore production of the stuff it consumes in its local economy. That means it wants to be competitive in exporting the things it's producing locally. That means by definition, it has to be inflationary because you're spending a lot of money locally producing stuff, and you're also needing to have a weaker local currency to be competitive in the export business. Okay. So Donald Trump had this big campaign of America first. We need to care about ourselves. We need to focus on the American. We need to focus on our economy. We need to focus on our own production. That's highly inflationary. That implies a weaker dollar. Okay. Now, the question is, how were we going to get there? Right? It was, by the way, a weaker dollar, all of these things, inflationary tendencies is very good for Bitcoin. Bitcoin, I believe, always is the best expression of currency debasement. It's a put option on the existing system. It's long volatility. It's the best way to express that things are going to have to change. The current monetary regime we're in now isn't going to last. The dollar is going to go lower. Hard assets are going to reign supreme. A neutral reserve currency is where humans are destined to trade. That's, to me, what Bitcoin is. So this is very good for Bitcoin. The dollar is going to have to get weaker. And everyone around the world is starting to focus on themselves, their country first. Highly, highly, highly inflationary. Okay. The question is, how are we going to get there? And I made a speculative guess after the election that in the near term, it was going to be volatile and the long term is going to be bullish. And I made that because there was no real clear path for this administration to get what they wanted without some pain first. Now, we've already been experiencing this pain. And this is not particular to Bitcoin. This is not Bitcoin pain. This is economic pain. The S&P 500 has been getting killed. Mag 7s have been getting killed. I mean, stocks are down. Everything is down. Everything that people own is down. We now are starting to see a weaker dollar. The dollar's gone straight down. Bitcoin has held this $80,000 mark. All eyes are on the S&P 500 because the government needs the S&P 500 to survive. It is the primary savings account for the American. It is the primary vehicle in which they collect tax receipts, right? Capital gains, people feel rich, they spend their wealth, they buy a house, they buy stuff, they pay capital gains. That's an income stream for the government to cover its expenses. So I do think April, May will start to turn up. Now, last few thoughts on this rant, timing-wise. Tariffs aren't supposed to actually enact and go live until the first week of April. I believe this market is still in a wear you out or scare you out mentality. If you try and trade it, if you try and add leverage, it's going to chop you up. It's going to eat you alive. Again, if you took a nap from right before Trump got elected till today and you woke up, nothing really changed. Actually, Bitcoin went up a little bit. Going into the elections, Bitcoin was chopping around 50, 60K. Now, if you were glued to the screen for every second over the last 4 months, you've seen it go to 110, then 100, then 105, then 95, then 100, then 90, and it's chopping around and it's doing this, and this guy's predicting that, and the third. It's a wear you out or scare you out time in Bitcoin. You got to stay humble. You got to breathe. You got to be productive in your life. You got to stack sats. I'm telling you, we're getting real validation from the Treasury on what they're doing. They're starving the market of liquidity because they're putting a necessary rotation on where that liquidity is going in order to get the weaker dollar, in order to get the growth. I mean, this is really exciting for Bitcoin and for business owners. I mean, listen, not to get political, for me, I'm stoked. They're talking about deregulating so that businesses can innovate. They're talking about lessening our taxes. They're talking about over-investing in the private sector to drive growth and innovation. There's a particular keen interest in Bitcoin. We have a strategic reserve. This administration wants businesses like mine to thrive, to innovate, to grow, to put America first. This is bullish for Bitcoin. This is bullish for America. It was always obvious, though, that there was no silver bullets when this administration took office. There's going to have to be short-term pain. It was always obvious that that short-term pain would be felt right away. Would you want these guys to put everyone through a borderline recession going into midterms or right now? So a lot of the same message, but now with added context and direct quotes from the U.S. Treasury. This market is going to try and wear you out. This market is going to try and scare you out. Don't bend, don't break. I think the second half of this year gets explosive. I think assets get explosive going into midterms. I still think we can end the year with a $250,000 Bitcoin. I think we're starting to feel out a bottom. Now, whether we actually go through, listen, when you put assets through what they're being put through right now, you might trip up a bank. You might trip up a hedge fund. You might trip up a major, well-known financial services firm. You might. You have no idea the stack of cards that gets collapsed when you send the S&P down 20%. You just don't. So do we get a mini financial crisis? Entirely possible. Could Bitcoin puke to 70K? Entirely possible. But my point is you're starting to see a little bit of a bottoming. Not this very day, but we've got actual tariff policy in 2 weeks. Let's watch the 10-year. Let's see what tariffs. I would not be surprised if Bitcoin is at all-time highs May, June. That means over $110,000. And that's 6 weeks away, 10 weeks away.
Mallers believes that Bitcoin will lead the recovery and that it remains the most honest and free market asset. While stocks and real estate are subject to various levels of intervention, Bitcoin's price movements provide a clearer picture of true market sentiment. He predicts that by May or June, Bitcoin could be hitting new all-time highs, potentially exceeding $110,000. While acknowledging that short-term dips are possible, including a potential drop to $70,000 if a financial institution fails, he stresses that these are temporary fluctuations. The overall trajectory remains upward, and by the end of the year, he still believes Bitcoin could reach $250,000.
Fed policy, meaning interest rates, Fed policy also, like the Fed, there's a rule the Fed controls at the banking committee level, which basically allows them to own banks, to own treasuries with no collateral, like infinite amounts of leverage. Okay. After 2008, everyone was like, we should probably make sure that banks can't infinitely lever themselves to death. They should have to post like some collateral in order to put these positions on. Very reasonable. But then that caps how much they can. I mean, the US government needs infinite demand for their debt. And so if you cap physically the amount of debt banks could buy, things get a little dicey when China's not interested anymore. So then they undid that rule and then they redid it again. And so the question is, the Fed could go to banks and say, screw the collateral, buy as many treasuries as you want, infinite leverage. That would be very inflationary, lots of liquidity, lower rates. I mean, listen, Jerome Powell can come out and say QT, quantitative tightening. I'm going to put a stop to it. And then separately, a little bit later, he could say we're starting QE, quantitative easing. Those are the things I'd look at the Fed. And then the Treasury, the Treasury general account. There's been all sorts of policies like the bank term funding program. You guys remember that? What happened after Silicon Valley Bank? There's always all sorts of programs and vehicles to inject liquidity into the market. Like one thing that the Treasury can do is revalue the gold. So the Treasury values gold on its balance sheet at a gold price that's decades old. If they were to update the gold price, they create $1 trillion worth of wealth in the Treasury general account. There you go. Boom. $1 trillion. So there's all sorts of things between the Fed and the Treasury. I think, listen, the takeaway is this. Trump is inflationary. Like thinking in my country first is inflationary. It means local production of goods and services. It means competing in the export economy. It means your currency has to get weaker. It means weaker dollar. It means higher assets. Trump talks a lot about S&P 500, real estate, and Bitcoin. His focus is on juicing assets for the people, weakening the US dollar, driving more growth in the private sector, not the public sector. That is what he campaigned on. And now we're starting to see it in action. That's why I said I expect volatility in the short term, things to chop around, things to be uneasy. How's tariffs going to shake out? How is Powell and Trump's relationship going to go? How is the rotation from public and private going to go? That's what we're going to get in the first few months of this administration. It's going to be brutal. Assets are going to sell off. Bitcoin's going to lead. It's the only free market. But over the long term, I've been telling you guys, like at the end of this year, Bitcoin's going to be way higher than it is today.
Jack Mallers' analysis presents a compelling case for Bitcoin's long-term success. Despite the near-term volatility, the macroeconomic forces at play, rising inflation, a weakening dollar, and increasing liquidity injections, favor Bitcoin as a premier asset. His advice to investors? Stay humble, keep stacking sats, and don't let short-term market noise shake you out of your position. As we move into the second half of the year, all eyes will be on Federal Reserve policies, U.S. Treasury actions, and broader economic shifts. If history is any guide, Bitcoin's resilience will outshine the turbulence, paving the way for explosive growth ahead. Please like and subscribe.